Hey guys, welcome back to the final part of this little mini series of developing patience and knowing when to trade. So the summary of this is that, in fact, I'm going to draw this on. I wasn't going to draw this, but I'm going to draw it because I think it's quite a key aspect of this video series. I'm going to draw a little Venn diagram. Okay, so we've got 1, we've got 2, and we've got 3. All right, we've got A, B, C. Now, this is why patience is so important. I found my red pen just off screen. This is why patience is so important, guys. I'm going to fill this in very awkwardly without trying to drop my laptop. That is the sweet spot you're looking for as a trader. Okay, that is really what you're waiting for. If we go back to that previous example, by the way, if you're just here on this video, go and check out the ones in the series before we come up to this video, because it'll make more sense. But the point is that A was the range, B was the people getting caught in the breakout, C was the ultimate drive lower. And when I had all of those combined, that's my sweet spot. I didn't want to just trade in A and B because it didn't really make sense to me. I wanted to add that layer of C. I didn't want to trade the range and the breaks to the downside. I wanted to see the range, the upside and the downside break, or the downside break and upside break if you're flipping it on its head. So again, coming back to my edge, is trading when emotions are ruling people's decisions. This is from the retail perspective. The institutional one was a slightly different one, but understanding that when I see those kind of things, and when you see these kind of things as a trader, even on a swing trading perspective, a great example for swing trading would be, earnings. You've got a stock that's just pushing to highs, very nicely, chugging up, really well, good trend, good earnings over the year, expected to have good earnings, and all of a sudden they just go, oh, you know what, we haven't grown. We've struggled a bit with this, we've struggled a bit with that, whatever it may be, whatever the street is kind of focused on, and then it gaps down here. That may well be your edge, because from a swing trader perspective, you might say, well, that's either an exaggeration, and in the day it's a blip in an otherwise impeccable record of earnings, and I believe that it's still value. Or you may say, you know what, I think now people are going to run for the door. That's the end of this cycle of earnings. We've had a good push. They've kind of got away with it a little bit here, but now it's all come to fruition for them. Perhaps there's been a fundamental shift in people's behaviors or whatever it may be. I can't think of a good example, but perhaps an example might be Blockbuster to moving to Netflix, people's behaviors moving from sort of physical media to online media or whatever. You can make an example up yourself. The point is then, you go back to your question and say, what reason do people have to go short after I've gone short? And that reason would be that I think a lot of hedge funds are trapped in this. They are long and they are looking to probably crystallize this, because why would they sit through another 3 or 4 earnings cycles when they can bank this and move on to the next thing? So that's like from a swing trading perspective. And then from a day trading perspective, you've got various different strategies and different things to implement there. So it all comes back to this primary point of developing patience. As a trader, you have to be so patient, and then we talk about waiting for your edge. But there's 2 advantages from doing that. The first one is that you're trading when you have the most chance of success, so you're probably going to make the most money, right? If you're trading on something that hasn't got much chance of success, is a low odds, or is a risk reward ratio is poor, however you want to kind of fraction that or trying to bracket that, you're not going to make as much money. So that's number 1. And number 2, which to me is the most important, is you're not wasting money by taking losing trades on trades where you don't have an edge, whatever your edge may be. And we've discussed in the previous videos my edge to things, and we alluded to earlier other traders, the way that they have an edge. But you think about the trader who trades at a prop firm and he's trading interest rates or whatever it may be. He's not all of a sudden going to take his whatever bankroll he's got and just have a go trading Netflix weekly options, for example. It just makes no sense for him unless there's a really specific opportunity that's been highlighted. A really extreme example, but unlikely. The point is, he's not just going to randomly go and trade that, because why would he? He knows what his edge is. His edge is reading order flow. excuse me, his edge is reading order flow on the interest rate markets or trading the spreads or the calendar spreads or whatever it may be, he's not going to do that. Similarly, you know, a guy who's developed an algorithm for trading, you know, the algorithm works, it does this, it does that, it's very successful. Do you think he's going to take the profits from that and suddenly have a day trade on the euro US dollar because he finds a pattern that he likes? No, he's not. He's going to go and see if that's a genuine edge that he wants to actually put some capital in place. So, you know, as retail traders, guilty of it myself. Maybe you're guilty of it yourself. I don't know. But recognizing really, truly what your edge is. And if you don't know what your edge is yet, take some time to work it out. Because honestly, that will be the biggest thing that will help your trading, is just saying, listen, what am I good at? You know, what am I good at? If you're not good at anything yet, then keep working at things, because you'll find something that works. And in fact, I would go so far to say that perhaps you have got something you're good at, but maybe it's to do with the fact that you've clouded it all in with all the other bad trades and you don't really know what's working. Perhaps your journaling needs to be upgraded a little bit. Perhaps you need to analyze a little bit more what's working for you. Then when you find that little bit of light in the sort of sea of what appears to be just a losing sea, you can then nurture that and then draw that one out and say, okay, well, that works well for me. That's worked well for me over that, and I've only just spotted that because I've made such a myriad of bad trades within it. Pull that out of there and stretch it, and then kind of nurture it a bit more and add layers to it, be more specific. Then use that as a focus for building on and say, listen, this is now my edge. I'm pretty good at this. It may only be the smallest possible one setup, but then you can build from it, expand and expand and expand and expand and grow it to a point where you now have a library of setups based around that, as I do with the, and by the way, I'm not comparing myself to some of the Tudor Jones Paul Tudor Jones by any means, but just from my my fortunate success in the market to date is by nurturing what I know that I can do and then stepping back when I know there's something that I'm not very good at and just grabbing that, saying, listen, retail flow, retail emotional flow, institutional order flow, really good at that. Grab that and then use that and say, that's my edge now. I will only trade when I have my edge. I've rubbed it off now. Developing patience and knowing that's only when I'm going to get involved, because you know what, if I get involved at other times, not only am I going to lose money, but that's going to undo all the good work I've done from the previous times and waiting for my edge, whether that's intraday basis, whether you're looking at it from a day-to-day basis, a month-to-month, whatever it is. So anyway, I hope this is something used to you guys. If you like this kind of thing, hit the like button, don't forget to subscribe. Back with another video soon. Take care. Good trading.